Good afternoon, everyone. This is Louise of the Lovewell team with Katie Lovewell and Maggie Hanson. And we're so lucky today we have our wonderful loan officer, Bill Jarvis. So without further ado, Bill, take it away. Tell us all the glory and everything that goes on with interest rates and the market and whatever you see coming down the pike. Take it away.
Well, unfortunately, the glory was a couple of weeks ago. The rates are up a little bit. So we dipped below 6% a couple of weeks ago for the first time in a long time. And we're back up a little bit, not too terribly bad, back up to kind of where we were a few months ago. We're like 6 3/8 for a conforming loan. Still a tiny bit under 6 for FHA and VA. And the Fed just met today, did not lower the rates. That was expected. So the market didn't do much today. But rates are up probably close to 0.5% just from a couple weeks ago, and probably not super likely to go down real quick. But overall, by the end of the year, they're expected to come down. Certainly, the price of oil isn't helping right now. The 10-year Treasury's gone up because of it. It's not good for inflation to have higher price oil. So we'll see. That's kind of the big key right now. I think if the oil situation, the Middle East gets under control, knock on wood, who knows how long that's going to take. But rates probably should, had it not been for that, rates would be 6% or maybe a little less. So hopefully that continues. I don't know when the last time I was here, but the conforming loan limits again for 2026 are up. So the conforming loan limit nationally is 832,750. And in high cost areas, which all of the immediate Bay Area is, it's 1.249. So that's up a lot. So a loan of up to 1.249 is high balance conforming now. So pretty good rates and little easier qualification than jumbos for the most part. So that's encouraging. And like I say, I think rates hopefully should trend down a little bit this year, but it's all world's a crazy place. So we'll see how it all goes.
All right. Thank you, Bill.
What
Sure.
about, I just thought about this. What about the stock market? How's it doing?
Very well. So stock market's still doing well. Inflation has been the overall numbers of the stock market are fantastic, but it's mostly just a handful of companies that are driving that. It seems anything connected to AI and all the tech stuff has gone up wildly. So, but all the indexes are way up. Everyone should open their retirement account and be pleased. So for the most part, pretty good.
All right. Thank you very much, Mr. Bill.
Yes.
Okay, thank you.
Thank you.
Have a wonderful rest of the day.
Thanks.
So now we're going to dive into the numbers put out by our local real estate association, Bay East. We're going to start in the southern part of Alameda County and in Fremont. And so what we're seeing in most cities, and this also may be affected by the fact that interest rates were also, down a few weeks ago, is we definitely see a bump up in prices, which increase in the pending. So it definitely seemed like demand, which is very normal also for February timeframe. So the demand seems to be picking back up. Now, not in every city, because of course the Bay Area is not uniform across all cities, but most cities seem to have an upward trend with the prices. So some have a really big upward trend, some have a little one, some are flat, some are going down, but we'll go through and you'll see. So here we are, Fremont, definitely see median prices heading back up after a low point in January, and both active and pendings have gone up. Actives went up by 10, pendings went up by 20. So definitely that's a good place to see the demand going up faster than the actives. All right, moving on to Hayward. Big price increase, one of the biggest ones. So you can definitely see pendings went up from 26 to 40, and active actually went down, interesting enough. So that probably also helped kind of explain why there was such a big jump in prices. I expect they're, it definitely like the median price is higher than it was, I'd say, any point last year. So could be a correction, but we'll see. Maybe it'll keep going. Hard to say for sure. But then look, the city next to Hayward is San Leandro. And we think the opposite. So I think, I mean, it could be wrong, but I would hope that it would switch up, because we do see that the pendings went from 14 to 23. So definitely an increase there. And active stayed the same at 31. So I would think that would swing around. All right, Castro Valley. This is one where I'm like, it's kind of flat. So again, different. Although right next to Hayward and San Leandro, pendings did increase from 13 to 19. Actives also increased 18 to 22, but definitely seemed like demand was a little bit higher. So sellers probably happier in Castro Valley, or things are going in their direction, I would say. And then Oakland, also again, we see an increase in the median price. Pendings went up, actives went up, about pendings went up more again. So it definitely seems like there's more demand there. And then moving on to Alameda, a big, like just some big swings in some of these cities from, like November, it was way up. And then it went down December, January, and then back right up. So for buyers and sellers in Alameda, you're like, what is happening? But anyways, definitely up right now. So good news for sellers. And interesting enough, pending stayed the same and actives just went up 1. So just staying the same on those numbers. And then moving on to Berkeley, we see again, like many other cities, upward trend with the median price. Pendings went up from 13 to 37. So it's a pretty good jump. And actives 39 to 56, also a decent increase. So definitely just seems like, yeah, more people want to buy and sell in Berkeley. And then moving to Lafayette, though, like I'm already, it was not quite as drastic as San Leandro, but we definitely see a bit of a downturn with the median price. But pendings did increase and actives actually decreased. So who knows? But it definitely seems, I mean, I think it may switch back. We'll see. Maybe Lafayette and San Leandro will turn around next month. And then moving to Pleasanton, so heading back down south, back in Alameda County, we have again a huge price increase, bigger median price than it appears anytime last year. Pendings definitely went up a little bit. Actives also went up, almost the same. So, but very interesting, the demand just shot up. And then Livermore, city next to Pleasanton, shows that median price went down. So, but actives went up quite a bit from 47 to 71, and the pendings did go up, but just from 34 to 40. So that is, those are the numbers, again, put out by our local association, Bay East, which you can always go to their website, and you can go to, now let me show you. I have to remember how to do it. Go under MLS and tools, you go under city information or real estate market statistics, it'll take you to the same place. And then you can just click on the cities and pull up this information. We always pull up single family homes, which are detached homes. So over here under housing market reports. Oh, apparently Piedmont's not a great example. We'll go to Pleasanton. And there's attached, which are like condos and townhomes, and detached. And then if you want to look at older ones, you go there. So that's all I have. Ladies, would you like to add anything else?
Yeah, great job, Katie. Thank you for taking us through the numbers. Always so good at that. I mean, I think that the numbers seem pretty promising across the board. Of course, there's some cities where we're seeing a downturn. San Leandro was really strange, that big drop. I couldn't quite figure it out because, the actives stayed the same and the pendings were going up. So I don't know if that was a data error or what's going on there, but that was a little bit surprising. We have a listing coming up in San Leandro, so I'm hoping that those numbers are going back up. Hayward, very excited to see that big increase in price from a seller's perspective, simply because we'll be putting a home back on the market that we had taken off the market last year. So just waiting for those numbers to get really good to time that correctly. And then Castro Valley have another listing coming up. So sellers are seeing some good numbers there. So that's promising. Happy about that. But in general, I mean, it all seems pretty good. We've heard that there are lots of buyers out there right now. So I think that, you know, it's going to be a pretty good year, I'd say.
All right. Well, I think anything else, Mom or Louise?
I agree with you guys. It's just really kind of, I don't know, tricky, I guess, because, you know, we've got the thing that's happening in the political climate, the war, which I think making some people buyers, some people kind of scared, but yet we talked to our friend Liz and Ted, they had like, I think 72 groups come through their recent open house. But it's interesting, at the end of the day, I think they only ended up with 3 or 4 offers, and then the one offer backed out, and luckily they went to offer number 2. But yet, same city, Castro Valley, house over on Ellsbury, they get 11 offers. So, but it checked all the boxes. So if the house checks all the boxes, meaning location, price, condition, the people want to buy something that's really fixed up and nice. And if it's really fixed up and nice, everything goes.
Like recently, like not fixed up 30 years ago, which, but yes, recently remodeled for sure.
But yeah, so it sounds like, you know, according to Bill, I don't think the interest rates, not expecting it to change too much. So I guess, you know, buyers will just have to be okay that, you know, I guess they'll be lucky if they get like 6 1/4 or 6 3/8 or whatever it is. So I guess we just have to be patient. But the good news is, you know, when you look at all the cities, there's inventory. There's definitely inventory. So seems good. And it's hard to believe we're right in the middle of spring with Easter and Passover just right around the corner, right?
Yep.
Yeah. Happy Easter, everyone.
I know.
Yay.
That's it. So I think, for my part, I think that's it.
All right. Well, then we hope everyone has a great rest of their March and we'll see you in
Yeah.
April.
Bye. Bye, everybody.